Hey everyone, welcome to your BTC SOL so daily close update. First of all, apologies. I got dragged out for a surprise birthday party last night, and I am feeling very much worse for wear. But you can probably hear my voice is a little bit gone, but we'll get through this. So let's start with liquidity. Looking at liquidity on the 1 day. There's obviously been that huge spike up overnight, which has taken out quite a bit of long liquidity, and we've still sort of got that little area there on SOL up to about 205, 206. But pretty much on the 1 day, everything is now to the downside, so everybody has jumped in and started logging. And BTC never actually got down to that 110 level. It looks like it bounced off a 6 day range support, which I'll show you in the chart soon. I'm not liking what I'm seeing on BTC. The liquidity is still in the areas that you'd expect it to be taken. There's potentially some kind of push that might come up into that 120 area, but yeah, but there's some things happening at today's close that might indicate that there's going to be another rejection. So there's your 1 day. 7 day liquidity. Looking pretty even on BTC, so good reason to both swipe the top and swipe the bottom, which kind of lines up with what we'll see in these closes. SOL on the other hand, there's almost nothing left to the upside. When you look at it, it's just a completely flat line. So, maybe 205, 206, 207, 208, some area around there. The closes on SOL are looking a lot more bullish. But we've still got that huge pocket of liquidity traveling all the way down to the 170 area. So I think the moment we start to assume that they're not going to take it might be the moment they do. So, and I think what we're going to see on BTC, I think might actually be the thing that triggers a bit of a pullback. 30-day, a little bit there to be taken up to about 212 on SOL, and again down to sort of that 160 area, 159. And BTC looks pretty even. So, all the way up to about 125 if they wanted to take everything across the top, and still down to sort of like 109, 108 is even starting to form up a little bit. So that's the basic overview. Have a look at what they did overnight, which was pretty impressive. So we had this big shoot up. So that they started to form yesterday. We started to get a bit more high time frame liquidity coming in around the 116, 117 area, and I was thinking that we might go up anyway to sort of that 115 area and then reject from there. But yeah, they absolutely drove it up. So and it's still up, but it looks like it could be starting to sell off a bit. So we've now got this nice big chunk of liquidity on the low time frames on BTC up to sort of like 119, and on SOL you can see it's starting to form all the way up to about 210. So yeah, they've definitely created some pretty big gaps, and as longs come in, those gaps are going to fill to the downside, and once they're full, sort of once between this 116 area and this sort of 111 area, once that starts to get quite dense in there, then you run the risk of them going, cool, it's easy just to shoot down now and just drive through that to actually hit the stuff that they might have actually not got this time, but may still have the intentions to go back and get. So I'll be keeping an eye on this to see if it sort of gets all dense. Okay, let's have a look at the charts. So where are we? Let's have a look first at strength. 2D connections open. So yeah, the SOL strength has just shot through everything, and it's come up and hit that break level that we had tagged there at 17153. So today, what we want to see is we want to see that close over the top of that, and if it can't close over the top of the 17153, then at least a close over the 17095 level. So either way, we want to close over one of these break levels. It will be above the 16314 break level, but it won't be a hard close of it. So it is very possible that towards, what do we got? We've got 2 hours to go. Very possible that goes either way. It could go up, it could go down before close. If it closes underneath it, that's a little bit bearish because it probably will bounce off that and then come back to actually retest the trends at the sort of 166 sort of area, or maybe the hold level 163. Long term bullish. It's great. We've gone above the trend. We're still holding the support trends. We're building hold levels. We've hit break levels. The first step in price going up is it has to hit break levels. So they may convert to origin levels, in which case you might get a rejection down to test one of these supports. But the cool thing is the supports are all there. So that's how that's looking. And this is just so your BTC dominant stable assets. We've gone down and tagged that 64.5 area. In fact, it's absolutely tagged. This is lovely. So we're on the underside of the range trend. We're on the underside of the horizontal supports. So if we can close down here in the next 2 hours, then you'd possibly expect a break retest, which might bring us back up to 65. Or we could go back and test the hold at 65.62, which might then give you a bit of weakness, and things. But I mean, it's all healthy, and where the price is now, it's underneath all of the resistances. Really, it's under the downtrend, it's under the range trends, plural, because it's under both, and under the horizontal support levels as well. So if it comes back up and retests, it should reject and go down. So I guess what this is telling us is that we might see a little bit of a pullback, which you'd expect after having a big pump. So we might see a bit of a pullback in altcoins, and but overall, really good place to be if we want to see an alt season. And we've come all the way back through basically everything on the total. We've gone up and broken the break level at 363.94, and it looks like we might be back up over the older break levels as well. So if it can hold up here, again, you might get a retest pullback. There'll be a new hold candle generated down here at 353.54, so that's good. We're going to be above the break level there at 364. Really, there's only one level left on this thing to stop a complete bust out. I mean, you've got to get through the trends, and that might take a bit of time, but yeah, the trends have all been tested. They've all had their reactions. So if we actually get up over the support trend here, then yeah, we'd be looking at breaking through the top of that. So it's looking pretty good. All right, let's check out BTC. Yeah, so this is where I start to get a little bit bearish. It's still not really doing what you would expect it to do. So when we look at how bullish the market is in general, as far as dominance and as far as the total market cap, the thing with BTC is it moved this trend. So this is what happened yesterday. We had a trend here. It broke with the blue candle there, which was on the break level, and therefore the trend moved to there. Now there was enough of a wick on the bottom of that then you can bounce the support and you head to the hold level, which is up here. So that's basically one of the possibilities that could play out yesterday, and it did it did play out. But it hasn't actually hit the break level. So the break level of this distribution range, excuse me, hard night, was 117,500. So before the end of today, it would be a really good thing if we could actually get over that. Like if we can get up and over 117,500 and close, then at least we're starting up above the distribution range. If we don't do that, then basically the distribution range is still in play. It's still holding. So that's really the key level. We want to get up and over that. Now, it can happen tomorrow as well. Like, there's no reason why the next candle couldn't go up and over and then close. But you want the candle ideally to open on the top side. That way, the next one, if it's accumulation, can actually hard close the range, and then the price can play in the next range up, which is this range, which takes us to all-time high. So we still have hold levels up here at like 120, and when we get into some of the higher time frames in a sec, that's the one to remember, like that sort of 120 area, because I think what they might be doing is purposely sort of staying under this range, and we might actually see a push up into this 120 and then a rejection back. And because the higher time frames sort of imply that there's going to be a breakdown. So that's the 1 day. If we have a look at the 2-day close, so same really, 2-day bounced off trend. So it was a 1-day trend, it was a 2-day trend, it was a 6-day range trend. The bounce was big because there was actually just a heap of stuff in that spot. So we've gone back up into that range. We're miles away from the hold levels, but this is the thing that gives me a little bit of confidence to the rejection. This is a origin level up here at 128, so 120,826. It's not actually had its first touch rejection, and origin levels can break trends. That's kind of their whole purpose. They're polarized moments, and we've actually got a couple of them. So we've got this one running through here at 119, 811, and then again that one at 128, 120,826. So either of those levels, if they give an origin level rejection, that'll come back and probably break this trend. It'll probably break that hold that's forming today. And the thing about that hold that's forming, which is going to be so that's going to come in there at 116,177. So that hold level will try to support the price, and it's going to try and attack the trend. And there'll be a new downtrend today, which is there to there. The candle will probably open on the other side of that if it closes kind of where it is now, and that's good. So it can test the hold level and then bounce, and it'll target the top side trend here, which is about 122. But to get to that trend, it's going to run into these, and when it does run into these, they're going to send it back the other way, or they're going to try to send it back the other way. So I sort of look at this and think we might actually get just like a one more push, and then hit some really heavy resistance that's actually capable of breaking the support that's in play right now. So a little bit, it just seems a little bit like a trap. Okay, because you have way too many tabs open. So as you can see, there was a lot of support running through here. So this was a retest of a very, very old trend all the way back there, which moved from there up to there. So, but it's still there. So we could, if we close up over 117,335, we could get a higher hold level up here. But as you can see, we've got a hold level which is going to try and push price down, and we've got that sitting there at 119,239. We've got a 3-day origin level running through here as well at 120,945. So these are all big things that can do heavy rejections, and we have moved our trend from here, and we've started from the wrong side of this trend on the 3-day. So yeah, that's definitely not out of the woods. The break level of the 3-day range has been hit, so that kind of implies that there is the chance of a breakdown in price. But then arguably you'd also say that the break level from that 3-day range has also been hit. So more or less what we have at the moment is we have an origin level on the top and we have an origin level on the bottom. soon if we get one more 3-day candle anyway in accumulation. Now, if we get an origin level on the bottom and on the top, then it's pretty hard to know which way the price is going to break. But what you will know is that when it breaks, it will be a big break. And this is like, for people who have been in the live streams or seen some of the charting videos I've done, I've shown that like you go into a consolidation range, you form these types of levels on the top and bottom, and then one of them goes, and when it goes, the price really does dump or really does pump. So we've got one up here. It's really got to have a rejection, because that's typical. You create them by distribution off the breaks, and then you retest them, and then you have further distribution, and then the next time you get up and over it. It's the fundamentals. Like some people call, some people say they trade W patterns. Like price does this, and that's an origin level in play. Whether they call it that or just call it a W, I don't know. And of course, if it's an up and down the other way, they call it an M pattern, and that's what they're doing for shorting. But so it's the resistance levels are all around the same place on the 3-day, and again, just seems really trappy. And all of the actual untested supports are all down in that 110 or lower area. Let's have a look at the 6-day. So as you can see why that bounced. You had this range trend on the 6-day from June. June, that period in there. And so pretty much when we came down into here, you saw all that stuff we had on the other time frames, plus you had that range trend just running straight through there. So it gave it a hell of a bounce, but it's still actually under its downtrend. And it would need a whole nother 6-day candle on the other side of that. Plus, if it actually closes in distribution today, so like if we don't get up over, this have to be, 117335. If we don't close over 117335, then that is a distribution range, 2 candles, off a 6-day break level, which then means you have, once again, that origin level is now valid across multiple time frames. And so it's going to be, a pretty high probability rejection. And this has got a really, really clean, untested backside, frontside range. So that's 110675 would be an unsustainable bounce, but it would be a big bounce. And then 108297 would be the side required to break the trend. So you would typically see an unsustainable reaction off the back, and then later on at some point, which could even be like in the bear market, it comes back, and it will come back to that 108297 level. It might just be one of the stepping stones on the way down during the bear market. Okay, so let's have a look at our 9-day. So 9 days creeped back up above the support trend. So that's normal trend behavior. Trends get dived, but as the candles get close to closing, they sort of have to be respected again, and that's sort of why you see the wicks dipping down below trends, but then quite often they can close up. So this has got the same sort of levels. So this 108.350, that is an origin level that was the key level on this time frame, and that is actually the key level on a lot of time frames, including the weekly. But that was the level that once we crept up and closed over, you've got the volume coming in. So this is the type of thing that we are generating at the moment on some of those slightly smaller time frames, and we've got one at the top. So if we get over it, it goes price discovery, but most likely it will do a first touch rejection. So this was made here, and then this is the rejection area through here. We need to be doing something like that on those 2 and 3-day levels, back up around this 120 area. So so what that might end up looking like on the 9-day is it might end up looking like us opening a candle on the wrong side of the support trend and then going up to test the back of the trend which on those other time frames is actually us going up to reject off the origin level. So everything sort of has this confluence. It's doing different things on different charts, but it's doing them all around the same levels and areas. So it'll come back up, potentially hit something up there, and then have a bit of a dip down. It'll bounce off those support levels and go back up again. And in 9 days' time, we'll look at that candle, and it will look like it magically got back up over the trend or broke through the break and moved up. So that's this looks like it could open in a place to dump effectively, and all sort of confluent with what those lower time frames have. Let's have a look at the 13-day. So 13-day is going to create a range resistance trend. So that's pretty much from there to there. So this is assuming it closes as a yellow candle, which basically means a close greater than 116,425. So if it closes, this is actually pretty damned. Whichever way it goes, it's pretty damned. Sounds like I really don't like Bitcoin. It is very bearish for some reason. So if it closes like this as a yellow one, we get a range resistance trend at the top. And if we then go up and hit that, we'll be on the wrong side of the support trend, which means it has to reject back down to this support down here, which is around 109. And it also, if it closes yellow, it is a hard close of this level here, which is 108,350. So as a yellow candle, hard closing the lower origin resistance level, you would potentially then come down and retest it. As building a range trend, you might go up, reject down to use it as support to retest it. And it also is moving this trend, I believe. That for a second. I'm pretty sure this is there. Yes, correct. So it's also shifting the normal trend to the upside. So range rejection trend, normal trend moves to the upside. Prices on the wrong side of the support trend, hard closing a lower level for a retest, and has basically a crossover point of 3 heavy rejection bits of structure. So this is something that, if it does all that and closes up, then it might pump, take out that 121, even that 125 liquidity it could probably take, and then it would dump. But then why it's damned if it doesn't is that if it actually closes down for the day, then it's just a break of the support trend. And as a break of the support trend, it's going to need to dip to find support. So it just seems inevitable that BTC is going to crash. And everything is saying it, but it's not saying it for SOL when we get to that. So it's a bit different. Okay. So on the 18-day, we'll be moving a trend from below, which has been support, and it's going to flip to the top. Just more confidence that we're going to have to come down, and we're hard closing all those same levels: 109,988, 108,607, 108,350, all getting hard closed. We still have upwards trend support for this, so closing here, all the reason in the world to dip, because that is gone when that happens. So yeah, all the reason in the world to dip. But just so you can see the illustration up here. This didn't hard close, this didn't hard close, this didn't hard close. This little candle in here was the hard close of the trend, and then you had that dip back to the trend. So we're now going to be hard closing these levels, and we're going to be shifting that trend. And when we do shift that trend, we do shift that trend up to the top, you'll typically get a pullback to the trend regardless. So that's like 1138 sort of price point, and then it'll probably come back to actually test these lower levels. If it goes up first, it'll be worse because it'll actually have something pretty solid that it's rejecting off. I kind of want it to go down and then bounce and then wick through here for as long as humanly possible and maybe close another candle and etc. But okay, so that's that. 26 day. It looks like it's going to close in distribution, and you can see how they're positioning the corner of the candle to be just in the right place for the next one to open on the wrong side of the trend. So this is all confluent. This is kind of what I refer to it as positioning. So you find that when the candle gets close to close, you tend to get a little bit of price movement. They're trying to put it somewhere which has structural implications for what the next candle can do. So that appears to be getting positioned so that it can open on the wrong side of the trend. It's a 26-day candle. It can go down. It can hit all those levels. So we've got the 108 350s and 106s, 104s. There's obviously some lower levels on these bigger time frames. And it's also going to be a break of the uptrend. So going to break the uptrend, going to be on the wrong side of the top side trend. There's really just not a lot of worlds where that doesn't go down. So it would just be really unusual for that to do anything other than go down. Yeah, it might go up first, grab some liquidity, play around, mess with people, retest the backside of this trend broken. That's all possible, but the biggest chance is that that's going to come down. That's the 26 day. And then the 39 day, same positioning. Now it's just getting positioned so that it can open on the wrong side. This has got the support trend still running through here, so that's good. But as you can see, they can dive those trends. They can even stay under them as accumulation candles and just keep following up on the backside. Now it's kind of like someone trying to climb up the wrong underside of a ladder. It's not very easy. But they do that. They can just go up like that until they get back over top of it. And then they hard close it, and then they sweep all the liquidity and do it again. So, we're probably going to open back up in here. It's going to be a really, really bad place for the price to be. It still has support. So then, getting a dive of liquidity and then a pump off the trend is what that's kind of saying to us. And then we come over to our 78 day, and so this one is on the top of the trend. It's most likely thing that this is going to do is the next candle is going to open. It's going to come back down. It's going to retest the backside of the trend, which is about 108.5. So you can see the confluence here across all these time frames. They're showing you that the highest time frame is saying, cool, we're actually getting through this trend. They haven't hard closed it, but they probably will come down and bounce off it. And when that happens, that is probably going to be the final part of the cycle. That means we might have about 78 days. What will say the next candle, as an example, if it closes as an accumulation candle, but with a wick on the top of it, the trend will move to whatever it is. So let's say it's there, or just for visual sake, there. If it closes something like this, it'll have this top, and then it can just come up, hit that, and go down, and that'll be the start of the real price movement into some form of bear market. So this candle does not move the trend, so therefore it doesn't create or change where the topside resistance is. The price is getting pulled back to this, but you can see that it's not going to just go there. What's going to happen is I think it'll open the next one, it'll retest the trend, it'll bounce up, and then the trend will move. We'll get a wick. We'll get a rejection off the backside of it and down. I will probably look at just closing and selling off everything, even just any old shit coins that are sitting around in wallets. When that next 78-day candle closes, it's probably, if it's higher than where it is now, and the day it closes, we'll probably just sell it off, because there is not always the guarantee that it's going to go up to hit that trend and then come down, because sometimes those first touch retests are actually left for the next cycle. So see how that plays. Let's have a look at SOL. Sorry about the voice. So SOL has busted through everything on the 1 day. It's above the break levels. It's above the hold levels. It's now pushing against something very old. very old. So that was a origin level from way back. It was from February. So what we want to see on SOL is we want to see it closing over that 200 mark, because then it's recapturing that level. It doesn't mean, because as you can see, they've tried before, like it tried there, failed. That's what actually created the origin level. And then this was the sell-off from touching it. And there's actually, technically, this 205 level is now one as well, because that break level got wicked there and you had that sell-off. So it has these same sort of things going on where just above the current price, we have these resistance levels like that break level, which could give a first touch rejection. And we've got these two origin levels. But where it gets quite interesting is that if we can actually get the older one and close a daily candle over the top of it in accumulation, then it becomes support. And then you basically have this $200 level and this 205 resistance. And when one tries to hit the other, the pullback probably won't be so bad. Plus, it has uptrend support. So this time frame is sort of implying that they could just go parabolic if they wanted to. As you can see by this, that just shot off. We actually had a 2-week hold level, a 2-week support trend, and a 2-week break level, all in the same spot. And it was all right about here. It was like 177 point something, and yeah, the price just took off. Or maybe it was the Powell speech. I just don't know how that stuff works. How is it his speech and that level both come into play at exactly the same moment? People think it's the news. Right. Now, the 2-day, as you can see, is going to be the second hard close over this break level. So that's really positive. It does indicate that maybe a pullback to about that 187 is warranted. But it's also sort of saying that we've got support here, right? So there's not, it's still holding its uptrends. If it gets up and closes a little bit higher, then it will actually be back up inside another interior. It's pretty much on the line at the moment. So as far as the levels on this time frame, we've got the trend up here, which is about that 206, 207. So that could potentially give a rejection. Just a pullback to retest this break level here. That would also be totally warrantable, but that's only really $1 difference from where we are now, about 198. There's not a lot on this time frame that suggests a heavy rejection, but yeah, 187, 188, because some of the ones we're about to see, I think, have a bit of confidence to come back to here. Have a look at the next one. Okay. I have, for some reason, got 2 1-day chart. Okay. All right, here we go, 6-day. So we're up above the break level. That's great. You can see it rejected that first time, but SOL was so strong that the rejection really didn't stop. But this is where it gets really fun. We're actually going to break the downtrend, the interior downtrend. That means that price is over time going to want to travel to the next trend, which is the one that's currently sitting up around 239. So whatever happens after this, whether there's a dump back to retest something, whether it retests the trend at like 182, whether it moves to the exterior, the interior support here, again, because it is quite deviated from it. So maybe it wants to come back over and touch on the trend again to give the next push up. We've got that rejection level, obviously, there at 205. If we do wick up into that sort of area and have a rejection and come back to one of these lower levels, then it's actually all very positive because we are breaking out of that downtrend. So, and even the wick in this case is quite small, but we will be under the relocated trend. So I think you probably will see that pullback, which I guess you kind of have to. If BTC is going to do it, this is probably going to do it. But it'll just be another opportunity to buy a dip, basically. Okay, let's have a look. The next one. So the 9-day. 9-day, you really want it just to go up, just slightly. So it's not going to break its downtrend unless it can get up over about 20. Well, it's actually not going to be able to hard close the break anyway, but if it can get over 200.170, at least it will be opening the candle above the break level. And if it can actually flip that candle into accumulation, which means about a 202 close, then you will be above the break level in accumulation, so it'll be a hard close of the break level. So that's pretty positive. So at this stage, it is going to generate a new quite parabolic interior again. So it's going to have this trend come in here, which would give it support at about 184, 185 if it comes back down. So that's looking pretty good. I think, if it closes exactly as it is here now, then yes, it probably will have a pullback, but it will be a pullback basically in line with a retest of this new, more sort of parabolic trend. You can sort of see just visually on the screen what's happening with SOL. The trends are quite flat, and then suddenly they're just getting closer together, and they're just like going up. So this is sort of what you see when things become parabolic. Okay. So same thing here. We're going to have a resistance trend moving into play at about 209, because that wick is probably not going to get recovered by the end of the day. But we're also going to generate a new support level down here at 188.6. So the 13-day is basically saying that we'll probably either go up into that trend and reject back to the 188, or we might pull back to the 188 and then bounce up to try and break the trend again. Either way, there should probably be a trade in this range. It's like the dailies and all the other ones we've taken this week. Hopefully, you guys are starting to get the hang of how this works. I know the guys some of the guys in the Discord are starting to actually make wins, getting some confidence up, which is good. So the 18-day, it's still holding its trend. It basically bounced off the backside of this one. It's going to hard close it. Now, when you hard close a downtrend, you move not to the new one. The new one is actually just something that slows it down and creates ranging. So this downtrend, when it gets hard closed, the price moves to the horizontal level, which is these 240s, 250s, 295s. It goes to these levels, and it just either gets there quickly or slowly, depending on the wicks, basically. Because if there's no wick on the top of the candle and the trend shifts to there, it just opens on the other side and it can keep going. But when it has a wick, it slows it down. So this has got support levels 179 and lower. It's got support trend coming through at 172. Even if we have a really big pullback, it's just buy it. That's it, because it will bounce. Okay, 26-day. We are literally breaking today the 26-day trend that originates from October 2021. So that's pretty epic. The levels that then brings into play sort of 153, and this is 153. That'd be bad. 253 and 244. Again, it'll shift. It'll be under the wick. That'll slow it down. It'll probably have to pull back to the uptrend here at about 187. So I think that's like, if we get a shallow pullback even to 187, that's probably pretty warranted across all these different timeframes and how they're moving their resistance around. So that's keep an eye out on that one. 39-day interior trend is gone. That'll break. Yep, it'll move. Yep, you probably get some kind of pullback there. But the targets for this are 253, and then the topside trend there, which is up around 264, 265. So it's looking good. Actually, sorry, I missed this. There's another trend in there. So if it pulled back, it could pull back to 182, 183 whenever it touches that trend, and then bounce again. So that's looking good. 78 day, a really big time frame. Now, this is the origin level here at 204.794, and then the other one is up here at 253. If we can secure that 204 level, we will go and hit that. Like it's just it'll jump between these two levels, and so again that's pretty epic. At the moment it's under it. It would have to get above 204.794 before close. So I don't know if we'll see that. And else, my bigger thought on all this is that if this is the final stage of the cycle, if you believe in cycles, then they don't want this to be a sustainable pump. Like it'll be an amazing pump, but they want it to be one that starts from the wrong side of resistance so that it'll come back down in the bear market if you believe all that. I, yeah, I'm not a huge hodler of things. I just trade them really. Okay, and just for good measure, we are above the 117-day downtrend. That's great. We've been above it before. When we did, we bounced off it and we went to 295. So yeah, we're above that. And we're generating another hold level there at about 189.270. So the pullback to that hold level and then just up could happen. The break level here, again, same sort of number, 204.636. So that's going to be a pretty pivotal area once we recapture that properly. It should get us up and over. So yeah, I think 1 week is looking good to break everything and turn it into support. So as long as it stays up for 2 days, and the monthly is pushing up through everything as well. So if it opens next month, it could pull back, test that trend, and go. So yeah, everything's looking pretty good there. So short version, I think we probably will still have a pullback, mostly just generated because of BTC. But SOL is looking really strong, and hopefully it won't be too much longer, and we'll see a real big move up. Hopefully, it'd be nice to get a $50, $70 sort of move. That'd be great. All right, so enjoy. Sorry about the voice. I will try not to go out and have another birthday until next year, and I certainly won't let them surprise me with concerts and way too much drinking. But yeah, hope you all enjoyed and got something out of it, and we'll catch you again. Cheers, bye.